tax expenditures, and this event is being co-hosted with the Results of America and our friend Bruce Reed over here. I'm Bill Hoagland. I have the pleasure of working with our evidence-based policy initiative here at BPC, headed up by Nick Hart, who formerly was the policy and research director with the Commission on Evidence-Based Policy Making that issued its report about a year ago, Nick, back there. And Sandy Davis, who formerly with CBO and CRS. As I have said many times, and to the chagrin of the staff here, that I always thought that during my years as a staff person in the Senate and in CBO, that senators and representatives based their policy decisions on the best evidence provided them. As we know, that was and is somewhat naive. Not everyone agrees to what the evidence is or how it is to be interpreted, and other factors, particularly political factors, plays a role in the final legislative decisions that as they are made. But that should not be a reason for those of us that labor in these vineyards of public policy to always we should try to evaluate policies and programs based on the best evidence to ensure that the taxpayers' dollars are being spent efficiently and effectively. It seems to me that when it comes to the various social welfare type spending programs, whether that be employment programs, housing programs, community development programs, child welfare, health education programs, it seems to me that when we're looking at the spending side, that we do try to apply some rigor and procedures to determine the evidence and its effectiveness. But when it comes to the tax code, whether that be credits, deductions, exclusions, preferences, many times also applying to the same social welfare spending program in terms of its goals and outcomes, I think we somewhat fall short of the oversight and procedures or processes that we devote to finding the evidence of their effectiveness. So, and just as a side note, it's always struck me that the estimate of tax expenditures, I know this is also an issue, but the estimate of tax expenditures today, $1.5 trillion, is almost equivalent. In fact, I think it exceeds the entirety of the annual appropriation budgets that we do. Now, let me admit that when you look at the good work that Tom Barhold's Joint Tax Committee does, staff and the Congressional Research in compiling, as some of you know, they put out this publication, Tax Expenditures Compilation, that when they do that, there is some assessment of the arguments for and against particular tax expenditures. But the question from my perspective is it sufficient? And relative to the work that's done on the discretionary spending side, which is addressed somewhat on an annually basis through the appropriation process, is it balanced compared to tax expenditures, which are considered somewhat, or tax bills that are considered somewhat episodically? So no surprise, my bias is clear on the table that we should evaluate tax expenditures more regularly as we do social welfare and other public spending programs. I think we have the right people here today to tell us how to do that, but also we have people here to point out some of the methodological, procedural nightmares that might accompany such a process. So let me quickly turn this over to Dr. Doug Holt-Eaton, who, to begin this dialogue, I don't think Doug needs any real introduction, friend, former colleague, the 6th Director of the Congressional Budget Office, also formerly Chief Economist for the Council of Economic Advisors in President George W. Bush administration, and currently President of the American Action Forum. So Doug, take it away.
I want to say thanks to BPC and to Results for America for the chance to be here today, Bill and Sandy in particular. I am flattered to be asked to give remarks on a topic about which I know essentially nothing. In fact, I'm going to prove by continuing to talk and I'm going to talk in basically three different areas. Talk about the sort of notion of oversight of tax expenditures in general, say a couple of words about the paper, and I want to thank the authors for providing such a great piece of work for the discussion today, and then a few reflections on sort of what introducing this kind of oversight would do to the policy development process and the politics of it, which I consider to be quite valuable. So the basic issue is, would it be a good idea to have improved or any oversight of policies executed through tax expenditures? And the clear answer is yes. And I'm going to elaborate on yes at length. First thing I do want to say, though, is the authors dodged the essential question of what exactly constitutes a tax expenditure. I applaud that. That will never actually be decided. There will be perennial fights, in particular about the treatment of the taxation of the return to capital and whether that's an appropriate part of the base, income, or excluded, a consumption base. I see no reason to relitigate that here, but that will come up if you move forward and embed this in the process, and that will affect the way the oversight gets done. So I think it's a good idea to do this. It's especially good to do this because budgetary resources are going to be tight. That's a euphemism for incredibly scarce. And as a former CBO director, it is my obligation to stand up and say apocalyptic things about the budget outlook in public. I'm going to do that for about 2 minutes now. You can drink before or after. Anyone who has looked at the CBO's 10-year budget outlook, much less the long-term budget outlook, they're now essentially the same, recognizes that the federal budget is on an unsustainable trajectory with an ever greater divergence between spending under current law and taxes under current law. This will produce trillion-dollar deficits within a couple of years. It will produce deficits that exceed safety margins of GDP, rising to average about 5% of GDP over 10 years. Debt relative to GDP will go from 75 to 100% nearly over the next 10 years. This generates a whole lot of potential problems. It is, number one, a mismatch between the top line revenue and spending that at some point world capital markets will become alarmed by, and a failure to address will inflict harm on the U.S. economy. It is driven in large part by the rising spending on mandatory spending programs, the Medicare's, Medicaid's, Affordable Care Act, Social Security's of the budget. That concentration of spending on mandatories has steadily pushed the annual appropriations out of the budget. We've codified that with budget caps in recent years, but it was a phenomenon that was happening over time anyway. Those annual appropriations, national security, basic research, infrastructure, education, are the things that the founders thought were the role of government. And they are the places where the federal government can genuinely invest and improve the welfare of future generations. So there's a mismatch in the way we're doing our spending that is underneath this budget process as well. All of this suggests that going forward, there are going to have to be some changes. And I promise you right now that you will hear from the conservative side that there is just no way they're going to raise taxes to solve this problem. And you'll hear from the progressive side that there's just no way they're going to change those social welfare programs to address this problem. And they will both be wrong, because that's got to happen. And as that happens, we are going to see the need for oversight of appropriations, mandatories, and the tax code in a way that gives them confidence that the sacrifices they have made politically to get this fixed are generating results in policy that make it worthwhile. And so I think this is an incredibly timely paper, because that's an important part of what's going to go on. The other thing it would do mechanically is it would balance the treatment of mandatories, appropriations, and tax expenditures. And the fundamental rule of budgeting is have a level playing field. And because we don't have a level one now, it's easier to sneak something through the tax code and not face the oversight process. And that's not the kind of incentive you want built into the policymaking process. So I think this is just a tremendous timely discussion to have this. I want to turn a little bit to the paper. This paper is, these are my notes I wrote last night. This is clear, straightforward, and sensible. It is so at odds with what's going on in this town that I found it hard to understand. I applaud that. Everyone should read through it. It's actually a great read to sort of revisit the institutions, revisit the process. The authors do a great job of documenting the size of tax expenditures. They do a great job, I think, of sort of laying out the current lack of oversight of those. And then they talk about a few things, like, where could we locate the oversight, and how do you want to think about locating oversight of tax expenditures? I have my own particular view of this, which is I'm a big fan of competition. I like the idea that there is an Office of Management Budget and a Congressional Budget Office, and that there's somebody checking someone else's work. And so I see no particular reason to pick. Put one in the executive branch, probably in the Office of Tax Policy. They know something about taxes. Put something on the congressional side. It's essentially an auditing function. Maybe GAO is the right place to put it. That can be decided at some future point. But I'd have two. And I'd also have them inside the process. I'd have one in the executive branch and one on the congressional side, because I'm not a big fan of trying to circumvent the politics. In the end, you have to have good policy be good politics. And if you try to circumvent the politics, the policymakers will just start ignoring it, and the oversight won't happen. And so, when I read through there, I thought they had a lot of good suggestions, but I came down on the idea that it should be inside both the executive and the congressional, and that competition will be healthy in looking at the impact. It did raise a question which I had never actually thought about before, which is, if you're going to do this oversight to see if a program is meeting its objectives, you do actually have to understand what congressional intent was. And so I thought about the most recent tax bills, like there's an expanded child credit. What was the intent? Was it supposed to generate more kids? If people want more kids, they can have mine. I mean, that's one possibility. Was it supposed to enhance the care of the existing children? Can we look at how they're clothed, how they're fed, their health status? Is that the goal? Or was it supposed to make the distributional tables look right? Figuring out the congressional intent is actually going to be hard to get the evidence as to whether the program was actually aimed at that. Another one that jumped out in the paper was the 20% exclusion in the most recent bill for pass-through income. What was exactly the intent of that? Right? When I thought about it, it looked to me like a crude attempt to equalize the taxation of the return to capital invested in pass-through entities as opposed to C corps. There are lots of other possibilities as well. But I think sort of identifying that congressional intent is actually going to be an important part of this. And I think that that's an important part of the dynamics that will develop out of this. And so a lot of the papers is making the case that if we just look at how we're spending the money, we should check and make sure it's being done efficiently, trying to match objectives. That's all true. I think that have great virtue. Appropriations, mandatories, tax expenditures, doesn't matter. But placing greater emphasis on this, I think, produces some really good dynamics in the process. Number one, you or I, in a political sense, if I'm sitting a member or a senator, I'm going to want to get the guys trying to push this thing on the record as to their intent, so we can go back and check and see whether it ever worked. And I think that's a good thing. I think building into the process, the incentive to get people to lay out exactly what they're trying to accomplish would be a valuable thing, and the politics would be there to do it. I think the second piece of dynamics that would come out of this is greater research on the effectiveness of all of these programs, whether they're spending or tax expenditure programs. If you want to make the case that this wasn't good or was good, you're going to have to go to some sort of research literature, find a consensus in that research literature to make the case. This provides an incentive to do that research. It brings outsiders into the policy process and checking the effectiveness. I think we've seen that a little bit as a result of the introduction of dynamic scoring into the congressional process somewhat. We see outside groups now very interested in how you do it. What's the best way to evaluate the effectiveness of things that were dynamically scored? This would have the same kind of, I think, beneficial research implications. And I think that'd be something that we want. And I think it also start to generate a healthy competition between doing it through the tax code, doing it in appropriations, doing it in a mandatory spending program, right? If you've got insufficient oversight in the tax code, the other guys are going to start yelling, and you're going to get pressures for everyone's oversight to be better so that they're treated equally and preferred policies get pursued. And so I just want to genuinely applaud the two organizations for sponsoring this effort. I want to thank the authors for a great paper that's going to be the topic for good discussion. And I want to wholeheartedly endorse the idea that we should pay attention to how we spend our money, regardless of which funnel it goes out. Thank you.
Well, hello, everyone. Good morning. I'm Sandy Davis, Senior Advisor here at BPC. Appreciate the kind shout-outs from Bill and from Doug. I am so pleased to be here today to welcome you guys also to the event we're having here. And we're very pleased to be able to co-sponsor this, do this jointly with Results for America, this event today. I mean, we're especially pleased to have the two authors of the paper that you've heard referenced so far. I will tell you, we don't have printed copies of it here available to us today. It has been posted on the it's a Tax Policy Center website, right? Yes. And so, so that is available online for you to look at on your smartphones if you wish, but certainly when you get a chance. You know, this discussion today is really kind of refreshing. Believe it or not, how can a discussion about tax expenditures be refreshing? But it's refreshing in that it's, as Doug mentioned, it's a focus, different focus than what you get usually in most of these tax policy discussions. We're not talking about macroeconomic effects of tax policy or winners or losers, but we're talking about whether tax expenditures should actually do the things, as Doug mentioned, that they were set out to do. And how do we measure that? And shouldn't we evaluate them for that purpose? This is something that we at BPC believe strongly in. As Bill mentioned, we have our initiative on evidence-based policymaking led by Nick Hart. And we believe across the board, tax policy and spending policy, that programs should be evaluated for their effectiveness, for their outcomes, and this information should feed into the policy process. Determine how they should be changed, what new ones should be put in place, and just generally should have a seat at the table of all policy discussions. We're so lucky to be joined again by the two authors here. I want to introduce them briefly, and I'm going to step aside. Gene Sterling. My friend Gene has had many hats in his career. He's currently the Institute Fellow and Richard B. Fisher Chair at the Urban Institute. He has served as Deputy Assistant Director or Secretary at the Department of Treasury for Tax Analysis, I think in the Reagan administration. Is that right, Gene?
Several, including Reagan.
Okay. Been president of the National Tax Association, co-founder and co-director of Urban Brookings Tax Policy Center. In addition, Gene is a prolific author and has been, I would call him a warrior for calling our attention to the long-term fiscal policies that we have in place and their basic on sustainability, and think creatively about how we can deal with that going forward. His colleague here, Ben Harris, co-author on the report. Ben is chief economist at Results for America, visiting associate professor at Northwestern University, has been an adjunct at the University of Maryland as well in Georgetown, and formerly was a senior economist with the House Budget Committee when Chairman Spratt, I believe, was chairman of the House Budget Committee. And I got to work with Ben in that capacity when I was at the Congressional Budget Office. So without further ado, I'm going to turn it over to these gentlemen to present the paper, take some questions from you all, and then we'll go forward from there. Gentlemen, the floor is yours.
Thanks, Sandy. I appreciate the warm introduction. Let me just start with a few words of thanks. Thanks to Doug for the keynote. It's a true honor having you here. I honestly had no idea what you were going to say, so I was sort of pleased by the positive endorsement. It made your remarks even better. And a huge thank you to BPC for co-hosting this along with Results for America. I think that both organizations are clearly laser focused on evidence-based policymaking. So my hope is that this joint event today is the start of a long relationship given our mutually shared goals. I'm just going to make 3 quick points and then turn it over to Gene, sort of about the paper and the context for the paper. The first point is that the motivation for this paper grew out of what I see as sort of a growing movement, and I don't think that's too strong of a word, a growing movement around evidence-based policy. So Results for America was founded a few years ago with the sole purpose of driving evidence-based policymaking. If you go to our website, you see that it says, our mission is to make investing in what works the new normal, so that when policymakers make decisions, they start by seeking the best evidence and best data available, and then use what they find to get better results. Then here at BPC, you've got a new initiative around evidence-based policymaking, which is led by Nick Hart. BPC put out a terrific paper, I guess, a few weeks ago or a few months ago on 19 different strategies that Congress can use to inject policy into better inject evidence into policymaking. And as Sandy said, this is really refreshing. I mean, this is a bipartisan idea. It's sort of nice to be talking about this now, about how we can make government work better without the partisan politics that is such a distraction. And just if you want another example about how the movement between evidence-based policy making is continuing, we had a few years ago in 2006, there was a bipartisan bill that came out of Congress that created a bipartisan commission, which put out a bipartisan report. So you notice a common theme here. It's just bipartisanship throughout. So if you're looking for better government, if you're looking for bipartisanship, I think evidence-based policymaking is a terrific place to look. The second point I'll make is that this interest in better use of evidence or evidence-based policymaking has yet to translate into evaluations around tax expenditures. And that was one of the motivations for the paper. It was saying, look, we have all of these frameworks in place on the discretionary side, and to a certain extent, frameworks on the mandatory side that evaluate whether or not taxpayer dollars are going to what works. Let's extend that so there's more equal treatment to tax expenditures. And I assume everyone in this room is familiar with the concept of tax expenditures. It's the notion of spending through the tax code. Economists seem to sort of agree with this idea. People who aren't economists tend to find it somewhat off, and I've had plenty of discussions where people disagree with the notion of tax expenditures, but if you're an economist, you probably buy in to the notion that, look, if you get a $1,500 tax cut for having a mortgage and paying interest, it doesn't really matter if you get that subsidy on your tax return or if someone sends you a $1,500 check. That's all semantics. You're still getting a $1,500 subsidy. It really doesn't matter, and that should be evaluated the same whether or not it's being provided through the discretionary side, the mandatory side, or through the tax code. It's just all semantics, the difference. We have a $1.5 trillion tax expenditure budget. That's a ton of money. We should be making sure that's going to what works and that these programs are achieving their intended goals. But as Doug mentioned, we're not really sure what their intended goals always are. So to take one example, the mortgage interest deduction. The mortgage interest deduction was never designed to subsidize homeownership. It just was that it's just been in the tax code ever since 1913. It used to be you could deduct other types of consumer interest. As that fell off, we have this one big deduction, which costs around $60 billion a year. And we say, okay, it's for home ownership, but the truth is, it's always been there. So I think Doug's exactly right in saying it's not always clear what these tax expenditures are designed to do in the first place. And the third point I'll make is that, as we said, tax expenditure evaluation just pales in comparison to other types of evaluation on other types of spending. So just take discretionary spending as an example. Discretionary spending, sort of the first layer of oversight is the budget process, which includes agencies going through an exhaustive process where they submit their justifications. It's compiled by OMB, which has another level of oversight. Then the administration compiles its budget and submits that to Congress. Congress considers the budget, then has hearings through the appropriations process, and then requires 60 votes in the Senate and a majority in the House to actually pass. That's just to get the first dollar out the door. Then when that dollar has gone out the door, you've got GAO providing audits. You've got OMB, who has a central mission in preventing waste, fraud, and abuse. You've got inspector generals at the major agencies. Then you've got, at some of the agencies, you've got chief evaluation officers, like the one at Department of Labor, which right now is conducting 30 evaluations into its programs to see whether or not that works. In comparison, on tax expenditures, you've got JCT doing its great work, but it's not really charged with, it's not a central mission. Maybe Tom Bartold will have thoughts on this later, but it doesn't seem to me like it's a central mission exhaustively evaluating all of the various tax expenditures. So you have this asymmetry between these different types of spending, and that's a real problem, particularly given the magnitude of the tax expenditure budget. So with that, I'll turn it over to Gene, who will talk about how we can actually fix this problem.
Well, thank you. It was an honor to work with Ben on this paper, as well as our other co-author, Caleb Quickenbush. And it's also an honor to work with the Bipartisan Policy group here in terms of sponsoring it and with Results for America. And of course, the Tax Policy Center that was engaged as well. A really good group of people all the way around. When Ben approached me on this, he said basically, in this town, we've gotten to the point now where we all agree on the facts. It's time to get around to getting good analysis. All right. We'll worry about alternative analysis somewhat later. But I want to make clear that although we're talking about the need for greater and better analysis of tax expenditures, we're not necessarily saying even that the appropriations process in aggregate is somehow or another better than the tax policy process. They both have advantages and disadvantages. But we are talking to the extent to which we get the types of analysis and evaluation we need in tax policy. And just as a couple examples from history, and this goes way back, but when I was the coordinator, ended up almost by accident to be coordinator of the tax policy process in '84, leading the Tax Reform Act of '86, I discovered at the Treasury we had actually never, literally never done a comprehensive look through the tax code, which is sort of the approach we took at that time. We just never had the time, and this is in the Office of Tax Policy, which is probably the largest group of tax policy people, at least economists anywhere, a little larger maybe than even the Joint Committee on Taxation. Another example from my history, which is just a minor example, for years, because I work a little bit on charitable contributions, I discovered for 25 years we couldn't get the Statistics of Income Division even to report on aggregate amount of in-kind charitable contributions, which are now about 30 or 40%, just the basic data. So there are all these lapses in terms of what we do and what we do in terms of analysis of taxes. And of course, the main reason, which is going to come up over and over again in our paper, is actually the lack of resources. Tom knows that I was somewhat chagrined by the fact that in the complexity analysis, which is a requirement by Congress for the Joint Committee and the Treasury and the IRS to do a complexity analysis of a tax bill as it went along, we just really couldn't get much done. And even had statements there such as, it will not result in, this was for the 20% extra deduction for small business, will not result in an increase in disputes with the IRS, nor any regulatory guidance will be necessary. So you get things like this that just in a speedy process, without the resources and without a formal analytic process in place to make it happen, you're just going to get either lapses or you're going to get actual errors. So we struggled then, however, with what and how and where you might put such analysis. It's one thing to say we should need more tax expenditure analysis, but how and where do you do it? And we basically came up with two conclusions. One, no matter where you put it, you had to give additional resources. And B, you do have to think about ways of trying to ensure you can actually integrate it into the process, because if it's in the process, there will be demand for the use of and implementation, use of some of these resources and implementation of some of the advice. So I'm going to quickly go through this list, which you can read for yourself. And in many ways, we're just trying to tee up the ideas. We're hopefully that this paper is basically a way of actually generating more thoughts now on how one might do this, and we don't want to claim that we've had any one answer. And like Doug, we actually would think about putting analysis several places. We weren't even thinking just one office in the executive branch or one in the congressional branch. For instance, as you go through the paper, you'll see we talk about the advantages GAO tends to have, particularly on things that you might think of as more audit and administration, and also just size of staff. So there's some things that should be put there, but in terms of policy, probably you are going to have to be more directed to groups like the Joint Committee on Taxation. So what was our list? Well, our list was, we went through evaluations with the executive branch, evaluations by the nonpartisan congressional agencies, JCT, CBO, GAO. We talked about external evaluators. I'm not going to go through that very much because our conclusion was that on occasion you might use some external evaluators, but you have all of the same issues hiring and using them that you do with other issues. And something I do want to spend 1 or 2 minutes on, which is how can we set processes in motion that will actually make use of this. In terms of evaluations by the executive branch, Office of Tax Policy is probably the best equipped in the sense that it has the most public finance expertise. OMB has an advantage in terms of anything, particularly that cuts across agencies. So if we're dealing with something like the low-income housing tax credit, you might want OMB to try to require some integrated analysis between Treasury and Housing and Urban Development. We even talked about how you might try to empower the IGs to get a little more into this area. I guess technically they could get into some of these issues, but typically do not. Within the congressional branch, obviously the JCT has got the primary responsibility in the areas of tax, although CBO probably puts out more studies of particular issues. And so one wants to think about how to balance the resources there. And as I mentioned a minute ago, GAO has advantages in terms of size and in terms of examining often the efficiency and administrability of a variety of provisions. So let me turn finally just this issue about what types of processes you might set in motion. Some processes, by their very nature, lead to consideration. Now, when we talk about appropriations, we typically think of annual appropriations, but we don't necessarily argue for. In fact, I think the experience with extenders in the tax bill, we would argue against annual analysis of every tax expenditure. We don't think that that's necessarily going to be appropriate, but you can do things on a periodic basis. You could set up a system to periodically examine tax expenditures. You do have to face the issue Doug raised of what's going to be on the list, but even if the list is only 2/3 of what's there are a lot of these expenditures that are really never analyzed in any depth, and one could require them to be analyzed on a periodic basis. We could also put them into the budget process itself more formally. We don't favor indiscriminate, say, across-the-board caps on tax expenditures. We don't think they work any better than caps on direct spending. But one could think about some forms of sunsetting, particularly with respect to those tax expenditures that grow automatically. There's no reason we should automatically have more and more spending, for instance, through the home mortgage interest deduction every year as people buy larger houses when we haven't even done an analysis of how well the particular provisions work. So one can think about ways of sunsetting some of these, although again, I think one has to almost go through one by one to figure out how that would work. We mentioned the fact that one could set up some joint commissions. We didn't recommend a permanent joint commission. We don't think that works for the most part, but one could occasionally put up a joint commission, particularly where you're dealing with an area that cuts across agencies through tax and direct spending agents to deal with stuff that we often don't deal with. And a final one that is one of my favorites and one that I've been pushing for a long time. I do think IRS could be reorganized to do a better job with respect to the way it collects and analyzes data. I don't think IRS is the place to put the policy, so I'm not arguing that they be separated from the policy. They do have input into the policy office, such as the Office of Tax Policy, and they also often provide a lot of input, a lot of data to the Joint Committee and the other congressional agencies. However, I do think they have too little staff devoted to particular provisions that they have to implement. And one can think about IRS as either being way understaffed, or one can think about them as being way overemployed. There's two ways to deal with the extraordinary demands on the IRS, and one is, of course, you continually add to their resources. The other is you actually have them do a better job of revealing what they can administer, what they can't administer, as a way of having an input into the policy process. Even the way that they do evaluations on compliance, for instance, they'll often come up with statistics on how much over-reporting there is or how much under-reporting there is. They don't give you a statistic on where they don't know. So let's take something like, I'll go back to my in-kind charitable contributions. Anybody here get little slips when they go to Salvation Army or give away their clothes? You can fill out the slip for yourself. To think that IRS in any way can administer that is silly. But they don't provide us data that said, okay, here's Ben, he reported $10,000 for charitable deductions. We can confirm pretty well on audit, $3,000. $1,000 he really probably cheated on, but the other $6,000, we have no idea at all whether this is accurate or not. We need that data to be able to determine whether this stuff can be administered. And one could set up IRS with a modest share of its resources. Remember, at times they've approached 100,000 in staff. If you had 1% of their resources, and that'd probably be excessive, devoted to analyzing particular tax expenditures, making sure there were data on it, data on compliance, data on how much it's used, data on other issues like that, that could be 1,000 people or a couple hundred. So, as I say, we make several suggestions along the process lines. Our hope is the succeeding panel, as well as you, come up with other alternatives. The bottom line is more resources need to be put into tax expenditure analysis, and we need to think formally about what processes need to be put in place so that those resources will be demanded and used. Thank you. I guess we have 10 minutes for questions from the audience. I'll sit down over here.
We should have someone with mic.
Where mic?
Please identify yourself.
Thank you. Larry Checo, Checo Communications. Doug talked about congressional intent, and Gene talked about lack of resources. Can we draw a line between the dots of the tax cuts and Congress's intent? I mean, there's a correlation between tax expenditures and revenue. And if you're telling us that there's not enough revenue to do tax policy analysis, and Congress is cutting the budget, what are we supposed to think?
So I agree with you. And I think Doug spoke to this very well. We have a huge budget problem today. And of course, every tax expenditure increase, although this bill did cut back on the number of tax expenditures, it also increased the number, but every tax expenditure requires higher rates to even raise whatever the given level of revenue. I will say, and this is speaking how analysis actually does make a difference, however good or bad you think this bill was, if you look at what was in this bill, for instance, compared to what was in the campaign, it was maybe, Tom might have the numbers better. We did an analysis at the Tax Policy Center as well. It's maybe had about 30% of the revenue cost of what originally came out of the campaign. And a lot of that was due to analysis. Now, it wasn't analysis of each particular tax expenditure, but it was analysis of the cost of a lot of these items. And many of them were paired through analysis. So analysis does make a difference, even if it's only succeeding in what Jim Wexler often talks about, which is who's a former Joint Committee leader, who basically talked about if you want to be happy with policy and you're working in policy, you have to be happy getting a C+ or a C- once in a while. But if you're expecting to get an A all the time, you're going to be very disappointed in your career.
You know, I mean, I think that we did have this major tax reform. It created two new tax expenditures. One was the Opportunity Zone, which cost, I think, about $7 billion over 5 years. And then, as Doug mentioned, the 20% carve-out for pass-throughs. You know, I think for the Opportunity Zones, it's pretty clear what it was designed to achieve, which is to help reverse the unequal development of various places around the country. So some disadvantaged communities, we're trying to get more money into that. It would be great to evaluate that and find out if that works. It's not a ton of money relative to the other tax cuts, but this is something we've been trying to do for a long time. This is the time to evaluate it when it's starting right now, but we're not. On the pass-through, as Doug said, like, I'm not really sure why that was designed the way it was, and maybe Tom knows because he was central to the process. But we're spending $200 billion over the next 5 years on this, and it would be great with the new tax expenditure to have an explicit statement for why this $200 billion was spent the way it was, and then an infrastructure in place to see if it's working or not. Because if it's, you know, whatever the reason, I'm sure the Congress had a good reason for putting it in there, but it'd be nice to know what it is, and it'd be nice to evaluate it, and we're not doing either.
Carl Polzer, I'm a policy analyst. Did you guys consider encouraging in these new institutions a particular type of analysis? And I have two in mind. One is distributional analysis, and the other is whether a tax-favored policy would create relative cost inflation. On the first matter, there's a lot of concern that certain types of tax-favored benefits enhance inequality. For example, pensions, perhaps housing. And on the relative cost inflation, you have health insurance, and whether, you know, it encourages more insurance and, you know, more cost inflation than services that don't get tax favored, that have to operate in a free market. Perhaps housing there too. Thanks.
I'm not sure I know fully what your second part of your question was, but on distributional analysis, I actually think we do a modestly decent job between the Joint Committee on Taxation and Treasury and Tax Policy Center and others. We don't probably do it often enough. Again, I think IRS could do a better job, but I'm a great fan of the statistics of income and adequately giving them the resources. So I'm not sure on the distributional issue that we lack resources as much as we do on sort of the efficiency, meeting of intent, cost-benefit analysis, types of analysis that one really needs and sometimes gets through the direct expenditure agencies.
Yeah, so I mean, I agree with Gene on distributional analysis. Between the various think tanks and what we have at the public sector resources, I have a pretty good idea about the distributional effects of the tax cut, and TPC and Tax Foundation can disagree. We don't have a very good idea about if these are working or not. Just take, for one example, take retirement saving incentives. $200 billion a year on retirement saving incentives. This is a laudable goal, right? Everyone should be saving for retirement, or most people. It's really important to the stability of households. People are living longer. It's really important. But we have this very bizarre system of subsidizing retirement where it's basically based on often a multi-decade deferral where you get a write-off in 1 year and then you pay taxes later on. And these $200 billion is based on the concept that you're probably going to be paying a lower tax rate in retirement. Maybe that 20, 30, 40-year deferral isn't the best way to subsidize retirement saving. If you look at some of the studies that have come out of academia, so for example, there's a really high-quality study that Raj Chetty did based on data in Denmark. Denmark has much better data than us, by the way. But they found that for every $100 spent in subsidizing retirement saving, you got about a $1 boost in actual saving. That's not very efficient. And I'm not saying we shouldn't subsidize retirement saving. We should. But the current system, at least if you look at the studies, you can put together a collection of studies which show about a 1% increase in net saving for every dollar spent on retirement. So we can do a lot better. So, to answer your question, I think we're doing okay on distributional analysis. We're doing really poorly on finding whether or not these actual tax expenditures work. Any other questions? Yes.
Yeah, I'm Brian Tumulty from the Bond Buyer.
Just a second.
I'm Brian Tumulty from the Bond Bar. How would you analyze the termination of advance refundings for state and local governments, the benefit of doing that when you hear from state and local governments there is no benefit, and how would this work under your system?
So everything I've learned from advance refunding, I've forgotten. And there was a Hamilton Project paper and I used to be the policy director for the Hamilton Project at Brookings. Andrew Ng wrote about it. And so here's the problem, which is that I am not familiar with any public sector research on your question. There are at least one or two, probably more, academic economists who've written on it. But there's no connection between an academic paper, like the one I was sort of referencing, and the process. And that's a problem. And I've had 3 different public sector jobs that all involve tax, and I never had to learn about the question you're asking. And that's really the problem. So I don't have great information on what you're asking, and that's kind of why we wrote the paper in the first place. That's great. Okay, so turn over the panel now? Yep. Great, thank you.
Shift to our next panel. You guys come on up. All right. And sit straight across as you're lined up. Excellent. All right. Well, thank you, Ben and Gene, for that great presentation. I think that you've definitively answered the question that we actually pose almost rhetorically up front, is should we evaluate tax expenditures? And I think, broadly speaking, we're all in agreement that that is an important thing to do. And critically important given the level of resources devoted to tax expenditures and the important key policy areas and matters that they address. So we are now going to take the discussion a bit further and have a discussion here with a distinguished panel of tax experts, which I also agree needs no introduction, but I'm going to do anyway, and then talk further about the paper. So we are fortunate to be joined today. I'll start here to my immediate left. Tom Barthold, who anybody in the tax world knows needs no introduction. Tom's the Chief of Staff for the Joint Committee on Taxation. And the Joint Committee on Taxation, as you all know, is the agency, the organization in Congress that prepares nearly all the estimates of revenue legislation for Congress, does analyses of revenue of tax issues, and is also the organization that produces the annual report on tax expenditures, which we all use as the tax expenditure Bible, I think it's safe to say. Tom has been at JCT, I guess, about 30 years now. 31 years, but who's counting, right? and really, I think it's safe to say, has worked his way through all the phases of being at JCT, which makes him such an incredible chief of staff. He became full-time chief of staff there in 2009 and has worked on the full range of issues there that JCT handles. I had the pleasure of working with Tom when I was at CBO, particularly on in the healthcare reform debate, which we both have scars from to this day, and it was a pleasure to work with that staff. So to Tom's immediate left, Diane Lim, also a former colleague of mine. Diane is now with, as a principal economist, now with the conference board, and where she studies and writes on a variety of topics on economics. And before joining the conference board, has had a range of experience and important roles around this town. She has been at the 30-plus year career, I guess I shouldn't say the actual years, in various academic roles and also on the Hill. Worked as the chief economist at the Ways and Means Committee, at the House Budget Committee, the Democratic staff. I see that we dropped this from your resume, but most importantly to me, you were at the Congressional Budget Office, where we also were colleagues and worked in the tax analysis division at CBO. So tremendous background and experience. To Diane's left, we have Rohit Kumar. Rohit is now principal and leader of PricewaterhouseCoopers Washington National Tax Services Tax Policy Services Group. But I know Rohit, and many of us do, from the years he spent on Capitol Hill in the Senate Republican Leader's Office, with various leaders, I think a former colleague of Bill's under Leader Frist, where Rohit was the domestic policy director. He was deputy chief of staff for Senator McConnell at one point, and a lead tax policy counsel for the Republican leadership and for the Republican leaders for several years on Capitol Hill. And then, last but certainly not least, Bruce Reed. There to at the end of the line, Bruce is now a senior fellow at Results for America and CEO and co-founder of Civic Enterprises. But Bruce also has had many roles in public policy. Has been a chief domestic policy advisor for both the Clinton and Obama administrations, and led the major reform initiatives in welfare reform in '96 and also the 1994 crime bill. In addition, Bruce had the pleasure, I'm sure, of serving as the executive director of the National Commission on Fiscal Responsibility, what we all know as the Bowles-Simpson Commission, which I'm sure he also shares scars with, trying to pull together a group of disparate policymakers on some sort of an agreement about how to deal with the long-run fiscal problems that the country faces. So clearly we have a distinguished and an experienced group of folks which we're really pleased to have to sort of discuss further some of the issues that Gene and Ben have raised in their paper. And so to get the conversation discussion going, I'd like to sort of go down the line and have each of you sort of take a few minutes to give us your general impressions of the paper, sort of the issues that Gene and Ben have raised, and just sort of put it in a broader context based on your experience. So it's a broader perspective on tax expenditures and sort of anything that you feel is missing, additional points you feel should be made or drawn out as part of this discussion. So Tom, you want to get us started?
Okay. I didn't know I was a lead-off
We
hitter.
can go anywhere.
Well, no, this is fun. My general impression of the paper, or the general theme of the paper, I think it's fair to say, is that oversight is good. Now, once you say that, it's kind of like, for those of you that remember the movie Animal House, and they had a scene where there's the founder of Farber College, and the motto on the statue is, "Knowledge is good." So once you've said that, what more do you say? So what's the paper about is how to get more oversight, or how to get more effective oversight. And then I'll just say a couple general observations is and I come obviously from the tax world, not from the spending side. It's not obvious while it's true that annual budgeting forces some sort of decision, at least on the level of a program, it's not obvious to me that annual budgeting forces more or better oversight. It's clear that You don't have to make an annual decision on entitlement programs, permanent tax expenditures, and the like. But I think the paper starts from a premise that there's more analysis of the efficacy of programs when there's this annual system. And that's not obvious to me. Where we have some of the most analysis, I'd say, in the federal government, and this you'll observe is where it's systematized, is on Social Security. What's the trust fund balances? What are the projections over the long haul? Who's getting who's getting what at what level? What kind of income replacement is there? From my perspective, Gene had mentioned Section 42. Section 42 overlaps with HUD's program Section 8. It's not apparent to me that there's more analysis of the efficacy of Section 8 over the past decade than Congress has spent thinking about modifications or looking at the outcomes under Section 42. And I'd also just observe in terms, there may also be a question of what, there's questions in the paper of the quality of analysis. People can talk about that. But if you look at page 6 of the paper, 10 largest tax expenditures. Number 1, exclusion of employer contributions for medical insurance premiums, medical care. Congress not put in oversight analysis into that over the last decade? I think the answer, you may not like the outcomes, but they clearly put in time, sought data, sought analysis. Special treatment of retirement plans. We've worked with the members of the Ways and Means Committee and Finance Committee on multiple hearings, special working groups. Congress is asking the questions, they're putting in the time. Let me pair together items 3 and 4, exclusion of net imputed rental income and mortgage interest deduction. The Congress has looked at the mortgage interest deduction. Again, you may not like the outcomes that they came up with, but they asked for different policy options. They looked at different, who's benefiting on what terms. Here's another one that Congress hasn't cared about over the last decade. Deferral of income from controlled foreign corporations. Again, I think there's been a lot of effort, a lot of analysis. Basically, if you go down this entire list, the only one where I'd say maybe there hasn't been a lot of dedicated congressional oversight or policy analysis effort is a little bit on the deductibility of charitable contributions, but again, changes were made in the 2006 bill with respect to, in particular, the in-kind contributions that Gene mentioned. But let me pass on for the 5 minutes time to Diane.
Thank you, Tom. Diane, you want to weigh in?
Okay. So, Gene and Ben are both economists like myself, so I forgive them for their naivete about this topic. I think that I look at this topic, if you look at it from an economist perspective, we of course all agree that tax expenditures are often seem counterproductive, wasteful, handing out subsidies to people who don't need them and they don't make a difference. So the trouble with tax expenditures, I'll go through the major list. From an economist perspective, distributional effects. We don't like that they're handed out through a progressive income tax because that naturally makes the subsidies regressive forms of spending. We don't like the lack of transparency, salience. They seem hidden. And if you think about the fact that tax policy is often not perceived by the people who benefit from the tax policy, then how can that tax policy be effective at changing their behavior? Like if they don't even know what their marginal tax rate is, just for a simple example. Economists don't like tax expenditures because they're on autopilot like mandatory spending. And, therefore it's difficult to change or reverse course once they're in place and they're not annually revisited, and there's no requirement that they be annually scrutinized. And there's a political economy problem. Members of Congress don't have the incentive to scrutinize these tax expenditures. In fact, if they want a tax expenditure, they would prefer to not have evidence that might suggest to the contrary that it's not a very good tax expenditure policy. So all those reasons that economists don't like tax expenditures are actually the reasons why policymakers love tax expenditures. And that is the challenge. The answer to the conference title, should we evaluate tax expenditures, would certainly be yes from economists, but it would certainly be no from Congress and the administration generally. broadly speaking. There are some good eggs within there, but that think like economists and would say yes. But most members of Congress and policymakers and politicians, they prefer to play unsupervised. Tax expenditures are like the coolest secret playground in the neighborhood, and knowing about how to get to it gets one a lot of friends. And I'm saying this from working for the Ways and Means Committee for a number of years, and my bosses used to tell me so. So, I think that policymakers and politicians have much lower standards for what makes, or different standards for what makes for a good tax expenditure policy. They maybe emphasize who it benefits more than what it does. These are dollar flows, and so income effects alone are great to a politician or a policymaker, whereas economists worry all about incentive effects and substitution effects, and does it really make a difference in behavior? For economists, analytically, tax expenditures are so difficult to evaluate in the same way that you would evaluate direct spending from like a cost-benefit perspective. Like, it's obviously easy to figure out the cost of a tax expenditure, and we do that already. But the big question is, how on earth do you quantify a benefit of a particular tax expenditure? Because unlike direct spending, tax expenditures send out dollars all over the economy, and then the incidence gets passed all through the economy. And I don't know where you stop trying to follow a tax expenditure and the economic effects of a tax expenditure. There's also this huge, it's very difficult to say what is the marginal effect of a tax policy, all else constant, obviously. There's a huge problem from correlation, distinguishing correlation from causation. And once you figure out that a tax policy caused some behavior, if you can prove that, it's not clear what feature of the tax policy caused that behavior. So often I think that we as economists will assume it's the price subsidy that caused that behavior. But to a regular person, often it's not literally the price change, the relative price change that generated the change in behavior. It's the signal that the new policy sent to that person. Like, you go into a DC store and there's a sign that says you have to pay a tax to get a shopping bag. Mm-hmm. It's not necessarily that the 5 cents is so onerous that it changes people's minds. It's the fact that there's some social stigma. There's like a little signal, a social signal to you that maybe getting a bag looks bad, makes you look bad from a social standpoint. So I'm going to go back to the title of today's event, Should We Evaluate Tax Expenditures? And I would say, why, yes, of course we should, in an ideal economic theory kind of world, where our policymakers and political leaders care about seeking objective evidence to develop the policies that are best for our economy and society. But I think the questions to ask and the hurdles to overcome way before we get to the details about the best way to administer evaluations of tax expenditures are, 1, would the politicians ever agree to such a system? 2, could we economists manage to evaluate the messy complexity of tax expenditures as we would like to in an objective, kind of cost-benefit kind of way, which we're used to thinking evaluations of spending programs are done? And 3, could politicians and economists see eye to eye on what qualities make for a good tax expenditure and how to measure how good one is? And I think we have to start with that last question before we get to the first 2 questions, before we turn the first 2 questions to yes, and before we get to a yes on should we do it and how should we administer it, what organizations should find that. Should run those analyses. I think that collaboration with the business community is also important. Like, there's no better way to understand what a tax expenditure does and whether it's accomplishing its objectives than to talk to the people who actually benefit from the tax expenditure. And finally, I think we should put our hopes and desires for tax expenditure evaluation in perspective. And remember, first of all, as Tom mentioned, the government doesn't actually scrutinize all other forms of spending, of policy, as much as economists would like either. So it's not even happening on the spending side. And also that economists' criteria for what makes for a good policy is probably too high a bar to be practical and to be put into practice. Thanks.
So I will be a little maybe controversial in that. So I agree that politicians would be maybe reluctant or skeptical to bring a level of scrutiny to their own preferred policies, right? Because if it doesn't work, then it provides evidence against. However, they would be happy to bring scrutiny to the other guy's policies who they didn't support in the first place. And so I think there will actually, I think clearly the answer is yes, we could all benefit from more information, more knowledge. Evidence-based policymaking is an important feature of governance, and we ought to be more mindful of it. I think there is certainly room for improvement on the tax code or the tax expenditure side of the equation. Like Tom, Diane, I would agree that it's not like the scrutiny on the discretionary appropriations process gets the most scrutiny of all the ways in which the government sends money out the door because of the way that the paper describes. The mandatory, not exactly winning a gold star for the level of scrutiny that it gets, much like tax expenditures, right? It's a sort of set it and forget it. There's no requirement, no sort of external requirement or policy requirement that it be reviewed. There are economic pressures that may eventually be brought to bear that will require revisiting, but we're not there yet, although we're getting closer. So I think on tax expenditures, there would be a willingness to bring some more scrutiny to bear, only because from a politician's perspective, they all assume that their policies are the good policies and the other guy's policies are the bad policies, and therefore it's their policies that will fail whatever the analysis is that will follow. So I think you could get sort of ex ante, everyone kind of bought into the concept of doing this and doing a better job. Open question then as to what happens once the data starts coming back in and it determines that the policy that this Senator so-and-so championed 4 years ago is in fact not doing very many good things. Would that person then be willing to say, okay, look, we tried, we failed, let's take another crack at it? I think opportunity zones might be a great example because I know Senator Tim Scott a little bit. I think he is exactly the kind of senator that if 5 years from now or 10 years from now, whatever the end point of the analysis would be, if it turned out it wasn't incentivizing the kind of behavior that he had thought that it would incentivize, he's the kind of guy that would say, all right, look, this didn't work. That doesn't mean we stop trying to solve this problem, but it might mean that we need to take a different approach. The 20% pass-through deduction, I have a different take on that. I think it's already achieved its goal, because I think its goal was to secure the votes to pass the bill. So it has already succeeded in its chief purpose, was, did a bill get to the president's desk for signature? It did. Was it signed into law? Yes. Victory, right? And off we go. And sometimes that happens, right? I mean, I sat in a political leadership office in the Capitol, right? The intersection of policy and politics. And many times we did things that could legitimately be called tax expenditures, not because we thought they were good policy. In fact, we were reasonably convinced, even as we were doing them, they were bad policy. But there's no good in being pure as a driven snow if you don't have the votes, right? And if you don't have the votes to do the rest of the good things that you want to do, that's fine to stand on principle, right? As Dick Armey used to say, you're standing on principle, you're going nowhere. Right? So every once in a while, you had to make some compromises, and we did. And we did things like I knew were bad policy. And then we worked hard to get those out of the code, and some succeeded, others not so much. So, I mean, there's a little bit of a, like, I don't need analysis, ex post analysis. I can tell you ex ante, this is a terrible idea. That doesn't mean I'm not going to do it, right? Because I may have other purposes I'm trying to achieve, and a tax expenditure is the oil that greases the machine that kind of gets me to where I'm going. So, I mean, my perspective on this is obviously a little bit different. I think there is room for more analysis. I don't think we should overstate the quality of the analysis that we're getting in other areas. That doesn't mean we can't do better. But there is a political overlay to all of this, which even notwithstanding the fact that we may know ex ante or ex post that this was not great policy, doesn't mean we're not going to continue to do it for other reasons. And so often these expenditures come into play because they are politically popular and they provide political oil to make the rest of the machine work.
Not an economist.
Yeah. He says probably.
Right. So Bruce, how's that for an act to follow? What are your thoughts?
I agree with much of what Rohit said. Look, I'm grateful to Ben and Jean for taking this on. In Washington these days, you have a choice of existential crises, so thank you for tackling this one. I do have to confess at the outset that I often say I've been in Washington for 30 years, long enough to be part of the problem. And on this particular issue, that's very much the case. In my youth, in weaker moments, I may have created a few of these. And tax expenditures do come about for a good reason. Often there's an issue where the country wants something to happen, and one side or the other doesn't want to create a spending program to do it, so they create a tax expenditure program to do it as well instead. And in some instances, like the EITC, that's an enduring, smart solution. But I think Ben and Jean are absolutely right that that side of the argument doesn't get nearly the amount of internecine scrutiny that is, for better or for worse, useful on the domestic and defense side. I mean, when a domestic program stumbles or when a defense program goes awry, it can set that agency back for quite some time. And there's enormous amount of attention to it, and not nearly the amount on the tax expenditure side, given the amount of money involved. And if you think about the biggest challenges we face as a country in the near term, several people have talked about the fiscal challenge, where we're basically broke, going to have a debt larger than our economy within the next decade, the challenge of inequality, and the challenge of trust. Tax expenditures are the gas on the dumpster fire of all three of those. With 1.5 trillion in tax expenditures, which is barely more than what we collect in income tax altogether. We have a tax code that's more holes than cheese, and we are leaking revenue in a crazy fashion. On inequality, we can debate whether inequality is an area where the federal government should get involved in addressing, but the single biggest thing that we could do to reduce inequality would be to limit many of these tax expenditures. And on trust, the American people think the system is rigged. They think the economic and political system is not on the level. And they're right. And there's no better example than tax expenditures, which, because they get so little scrutiny and because there's so much money on the table, they're almost inherently suspect or corrupt. They are the grease that makes the machine work, or the greases the palms, or the algae in the swamp, and I think they're too big a temptation without more scrutiny. So I think that both Tom and Diane made a good case that we don't do nearly as good enough job of actually holding domestic and defense programs accountable for results, and I don't think Ben or Jean would disagree with that. But that's not an excuse to ignore it on the expenditure side. And Diane, you're absolutely right that, as my old boss, Ben's old boss, Joe Biden would say, never underestimate how little the politicians know about any given issue. We can debate whether that's willful ignorance or just the normal kind, but I think it's important to have facts out there as a guardrail, and it's also important on all kind of across, and this is true for entitlements as well, that when you don't measure for results, when you don't monitor results, then you don't design for results, and you don't get results. And I think we can see that in all of these different pots of the budget. So, I worry a little bit that measuring for effectiveness doesn't go far enough. I personally would be, I'm not so concerned about indiscriminate caps, actually. When we were trying to get our way out of avoid the fiscal cliff and default, Rohit and I designed the sequester, which you don't normally put on a resume. I'm not sure. C- might be a bit high, but the truth is, it was devilishly effective in containing spending, and we designed it really big on the theory that no one would possibly ignore that kind of sanction, and they did anyway. But you can't say that caps are ineffective in holding down domestic and defense spending. They're very effective. And somehow we have to force that kind of hard choice on the tax side. Now, it would be fine. PAYGO would be fine. Limiting tax expenditures on an individual level would be fine. But we can't go on where we can pass tax bills that have a whole bunch of these in them, and their only limit is whatever price tag they decided to associate with the budget resolution. So
I think one thing that is likely to change, certainly over the next 7 or 8 years, right? Post TCJA, all the individual provisions sunset, right, in 2025, right? And we look at the underlying budget picture, and you can see in 2025 the system's going to be under a lot of pressure, right? And we know from experience that when like a whole swath of the individual side of the tax code are set to expire, the one thing that's not going to happen is politicians aren't going to just preside over a tax increase on every working American in the country. And so I think there will be more demand for this sort of analysis in the run-up to 2025, because there's going to be pressure. When we did the fiscal cliff negotiations in 2012, at that point, everyone kind of conceded we were going to add this to the deficit. It was just a question of how much we were going to add to the deficit. I am not convinced that that will be the same going in assumption in 2025. And if it's not, then people will start to want to look very carefully at not only on the spending side, whether it's mandatory or even discretionary, but even on the tax expenditure side, where can we get some savings in the tax code in ways that maybe aren't an efficient use of the dollars in order to preserve the middle class tax cuts that were enacted in 2017, where there will be a lot of political sensitivity if that were not to happen.
So I would like to ask a quick follow-up to you guys. I just want to do one, and then we'll open it up to the broader audience. I knew you all would be very good at pointing out the challenges and hurdles, both to evaluation generally for tax expenditures and some of the premises underlying the paper. But I'd like you to, if you would, talk a little bit about, given these challenges, is there more that, in particular, Congress, I'm a Congress guy, I think really an expanded evaluation capacity for tax expenditures really has to sort of come out of Congress, because it's got to be a bipartisan movement, I think. So what are your thoughts on, given all the challenges you cited, what are ways that we could actually improve a level of evaluation for tax expenditures? And what I'd like to do is to call on Tom first, because Tom, in our conversation back and forth, pointed out something to me about legislation that actually attempted to expand an evaluation role, I think for JCT, several years ago, as sort of a springboard for the discussion.
Yeah, thank you, Sandy. I don't know if people remember this, but in 2009, the House of Representatives passed H.R. 4213, and it had a provision that required the Joint Committee on Taxation in consultation with the GAO to submit to Ways and Means and Finance Committees reports for each tax expenditure enacted in Subtitle B of the legislation. It had an ordering rule for how this was to be done. And here's what the members said that they wanted to receive. Report shall contain the following: an explanation of the tax expenditure in any relevant economic, social, or other context under which it was first enacted, a description of the intended purpose, an analysis of the overall success in achieving the purpose, evidence supporting such analysis, an analysis of the extent to which further extension of the expenditure, making it permanent, would contribute to achieving the purpose, a description of direct and indirect beneficiaries, an analysis of whether the tax expenditure is the most cost-effective method or are there alternatives, a description of unintended effects, an analysis of how it might be modified, interactions with other tax expenditures, direct spending programs, or regulatory actions. Now, that was not adopted. It was not adopted in conference, but notwithstanding that, these are some of the questions that members at the committee level frequently ask. So I think the question of the paper is how to systematically get analysis, make use of analysis. It goes a little bit to Rohit. You know, somebody might like, here, I don't like that guy's stuff. Give me analysis targeting that, that guy's stuff. The Congress chose not to systematize this, but they ask these questions frequently. So.
Any want to opine on why it didn't make it through?
Rohit, you can answer.
Yeah, well, I mean, look, I think part of the challenge is, we've got a template for what this would look like, right? We've got statutory language, and conference report language, and all that. Okay, so you tell Tom and his team, you got to do this. Tom will be the first to tell you, and he won't say, I'll say it before he does. He doesn't have the capacity to add this to the ledger, given all the other things that are going on. All right, so I got to give Tom and team more money, right?
Or it's a matter of priorities.
Right.
I mean, it's do
this
how
instead
much
of-
of this relative to other things.
Right, but as you are acutely aware, Tom, and I have been guilty of one of the complainers here, like one of the constant complaints from members of Congress is, why can't I get my revenue estimate more quickly? Right, I got something, it may have no chance on God's green earth of ever being signed into law, but that doesn't mean I don't want to score. Why can't I get it? Why can't I get it now when it'll be ready? And so I'm thinking about, I'm going to give more resources, either I'm going to give more resources to joint tax, or I'm going to slow down the revenue estimates that I already think are coming too slowly. But if I give joint tax more resources, do I want those dollars to go to this new adventure, or do I want them just to be able to provide revenue estimates more quickly for every member of the House, Senate, and the like? Well, that's an immediate need, right? I benefit from that immediately. If I could provide more resources to joint tax, I'm an elected official. What I want is an immediate result, and that immediate result is I get scores on my proposals more quickly. This is useful maybe down the road, but this is sort of delayed gratification. If there's one thing we know about our government, we're not particularly good at delayed gratification. It's hard to do in even our individual lives. It's even harder to do collectively. And so this is the tension, which is no matter where you do this, it's going to require resources. But there are so many other things that those resources, there are so many more urgent, immediate needs for those resources, it's hard to see how this rises to the top of the list.
So if I could just interrupt, I apologize. If you go back just to my top point on the paper is that oversight is good. It's a matter of priorities. Not everything that the committees want to do all the time is current legislation. Right. Sometimes it's oversight. If that's made a priority. And I think that was kind of the overall thrust of the paper. I'm sorry.
No, it's okay. In theory, you could do it the same way that some agencies and programs have tried to get evaluation money on the domestic side, which is allocate a tiny percentage of their budget for that purpose. If you gave a tiny percentage of any one of these tax expenditures to joint tax, everybody would be happy. We'd be able to get quick analysis of why these didn't work. The Republicans would be able to pass a tax bill probably every other week because the estimates would come back so quickly.
Tom command an army of several thousand. Right.
So I know we have a hard stop for a couple of our panelists at 11:30. So I want to give our audience a chance to weigh in with some questions, and here's your chance to ask the folks who know. So we've got our microphone here somewhere. We have a question right over here. Yes, sir.
David Wentworth, Taxpayers for Common Sense. I don't remember the exact numbers, but my memory is that sort of the top 5 or 10 tax expenditures account for a gargantuan percentage of the total. So it strikes me that a question that really ought to be asked, along with what Diane was asking, which is, it's not the efficacy of those things, it's the politics. If you suggest changing, any significant change to those top 4 or 5 or 10 items, you've got people coming out of the woodwork making it impossible to make any changes. Can you comment on that, please?
I'll comment. I think people are wrong about the politics, actually. My experience on Simpson-Bowles was just the opposite, which was that once you started thinking of tax expenditures as spending in the tax code, there was as strong a conservative argument as there was on the progressive side. And as long as you're ecumenical about it and you go after everything, then it's at least theoretically survivable. Now, we weren't able to enact that. We did get a lot of Republican votes for a recommendation that was pretty radical. It was, let's get rid of all of them and have a zero-based budget approach to add back the ones that really make sense. From the conservative standpoint, it offers the tantalizing possibility, which was very effective for Ronald Reagan and the Hill in 1986, not quite so effective this last go-round of if you get rid of a lot of tax expenditures, you can broaden the base and lower rates. And that is that's something that has a lot of appeal across the board. So that doesn't mean we'd necessarily win in the end, but I think it's a mistake to concede that fight so early. Because consider what the next generation of policymakers and lawmakers is going to have to do. Their choices are going to be, are they going to cut Social Security? Are they going to cut Medicare? Are they going to further cut defense and domestic? Or are they going to deal with these relatively unscrutinized programs that don't have demonstrated effectiveness and skew distributionally to a very narrow percentage of the electorate? Some of them have organized interests. Some of them have a ton of money and not very organized interests, and yet they endure. So I think it's a fight that we haven't had, and that if, you know, when it's a lot easier to cut spending than it is to raise taxes, and so simply changing the way we think about it would go a long way towards evening the score on that front.
So I want to be maybe disagree without being disagreeable, if I can. So you had an unusually, especially by the end, well-educated, sophisticated group of lawmakers you were working with in Simpson Bowles, right? You know, they didn't all start that way, but they got there in due course. But then you look at the broader sort of members of the House and the Senate, and the example I have in mind is the exclusion for employer-provided health insurance, one of the biggest expenditures in the code. And there was an indirect attempt to get at that in the Affordable Care Act through the imposition of what we so-called the excise tax on high-cost health plans, or the so-called Cadillac tax. For political reasons, it had a delayed effective date. And of course, as we got closer to the imposition of the tax, on a bipartisan basis, members of the House and the Senate, Republicans and Democrats alike, said, we don't want this thing to happen, we're going to kick it down the road. And I have now taken the position that the Cadillac tax, as originally constructed, will never come into law. We may do a different version of it, right? There's at least an acknowledgement that maybe this unlimited exclusion from employer-provided health insurance may not be the most efficient use of the dollar, so that was some progress. But then you're seeing the reaction, right? There was an attempt to get at it, and there was an immediate reaction to it that has been successful in delaying the effective date of that. And you know, whatever, we may eventually get around to doing something that's actually, you know, gets into effect on that question. But the politics, this is to the point, these big expenditures have huge political constituencies, and those political constituencies have a lot of political muscle, maybe not inside the commission, but certainly in the broader Congress. We have any rather recent evidence of what happens when we try to go after, even indirectly, one of these expenditures. And this wasn't getting rid of it. This was just like, once you hit a certain threshold, right, there's going to be a penalty.
Can I make a point on that?
Yeah, absolutely.
So I should have warned you, but one of my students from the University of Delaware, whose sole passion in life is to enact the Cadillac tax, is here in the audience covering this event.
Wearing Cadillac tax socks.
Yeah.
You know, Rohit has happy socks, and Max is a big fan of what you might call grumpy socks.
Yeah.
So, you know, I think you're right that on any given battle, it's difficult to take on the established interests and win, but I wouldn't underestimate the long-term impact of changing the way that we talk about this, and that you know, sooner or later we're going to have to thin the herd.
Oh yeah, no disagreement, but I'm just sort of, recent history would suggest that we're not politically ready there. Now, you know, there may be, and this is a broader question, when do we get serious about the budget? Is it, you know, when interest rates, when people go to refinance a mortgage and the interest rate is 10%, is it, you know, do we have a failure of a T-bill auction? I mean, what is it that, what is the precipitating, a run on the dollar? What is the precipitating event that causes Congress to get serious about the overall budget picture? And when that happens, I think we get more in the weeds on some of these questions as to what is the efficient use of the expenditure dollar.
So I thank you all. I think we've just about run out the clock. Fabulous discussion. Let's please help me thanking our panelists, if you would. And we'll turn it back over to Bill to close us out.
Thank you. And I don't know where you come out, but I have a couple of conclusions out of this. Number one, yes, we should evaluate tax expenditures. Number two, additional resources are needed to carry this out, particularly staff, Hill staff. No surprise coming from former Hill staffers up here and current. Doug Holt-Eaton at the top, Resources will be limited, though, going into the future, and will become even more constrained in the future. So we cap or sequester spending. My conclusion there is that capping spending is exactly the result of increasing the demand for more tax expenditures to accomplish what they want to do anyway. A vicious circle. Anyway, thank you very much for your contribution here this morning. Good day.